Alright, boys. Pretty big day here if you're trading the pound. Broke through fresh post-Brexit lows. Now, yeah, it looks like it should be hearing me now. And so sentiment-wise, it's ultra bearish. Technically, it's very bearish. Positionally wise, it's a little stretched. Okay, so normally I would suggest chasing a break like this if it wasn't sort of 7-8 days into a sell-off. The setup here is a little bit dangerous, I think, for those who are looking for that move down to say 125. Just short term anyway. I wouldn't mind selling rallies here on the pound, but just short term, I think that the combination of pretty good PMI data, and remember that the most important one's coming up tomorrow, and the fact that the market's trying to break at the same time on the same news that it's been using to sell for the last 3 or 4 days, while stocks are quite strong and dollar yen in particular is quite strong, I think that's a dangerous sort of chase. I mean, if you didn't have all those things happening at the same time as pound was breaking, then I would suggest that the sell-off would have been sharper than we've got so far. But the lack of follow-through so far below 128 is actually a dangerous sign, I believe. So, yeah, it's obviously very bearish, and it is looking pretty weak. Just wouldn't surprise me if I wake up tomorrow and it's had some sort of short squeeze. Now that short squeeze towards 129 would be a good opportunity, I think, to get into the market. Definitely some negative feelings towards the way the Brexit is being negotiated at the moment. So that's more to do with the hard Brexit or soft Brexit. While it hasn't really begun yet, there's a bit of fear here that the UK is sort of moving forward quickly without having assurances that they've got trade deals in plan, and that the danger here is that they're sort of held accountable to their commitments rather than doing the best thing for sort of trade deals. Now, I still think that there's a fair bit of time left before they invoke this Article 50, and that they will have a substantial agreement in place with Europe by that time, and that we will have a significant short cover rally, especially if data picks up and the BOE backs off cutting. It's just right now it looks like the bears are definitely in control, and you want to be preparing yourself for that 125, perhaps even lower than 125, if there isn't any sort of change in attitude from the UK position. Okay, so the government position needs to soften a little. Then some sort of air of compromise needs to come through. Alright, so yeah, the danger here is definitely to the short squeeze side on the pound. Now that would probably lead to some pound yen squeeze. It's not like the Deutsche Bank issue has completely disappeared either. Let's have a look at Deutsche Bank price action. Alright, now this is what you should be having on your charts if you've got access to it as well, because there's going to be some correlation between what goes on with Deutsche Bank in the next couple of days. Remember that the European markets were closed yesterday, so the German markets were closed, and what we saw on Friday was a huge rally on the back of rumours, and that's what sparked sort of the major rally in markets globally. And before that point, though, before that time, everything was under pressure. Yeah, and so if this comes back into downside, and there's been relentless selling on rallies of Deutsche Bank recently, and say there isn't any sort of clarification upon this rumor about the DOJ, Department of Justice, U.S. Department of Justice, lowering its number that it wants from Deutsche Bank, and or just generally banks, then I think that this will be another ongoing issue, and it's not over yet. It would surprise me if it's over. All right, I mean it's not the sort of thing which finishes with a rumor, and so it's definitely what you want to be focusing on in the short term. FTSE and DAX are doing really well right now, mainly because the currency is under pressure. And keep an eye on the euro. Euro's a sleeping giant, right? Euro hasn't been moving. But it's getting some pretty solid weakness coming through. Now that is where you would look at potentially some of the euro crosses, like Euro Aussie or Euro Kiwi. But that's another sort of debate that we have to argue whether there's enough negativity coming through from the banking sort of burgeoning crisis here to get the market focused on the downside. I don't know if I'm going to chase the euro, because it's, how many times have we tried to focus in the last 2 months? Have we focused on the euro and not got the downside action? Yeah. It's just extremely hard to sort of be ultra bearish here unless we get some follow through. But it does make sense that you will get some sustained euro weakness right now, especially if dollar yen, which has been sneaking higher, starts to really move. Okay, the dollar yen is sort of being undercover here. Usually we get some sort of Kuroda comment or something to move the market justify what's going on. I mean, there's a little bit of bond market moves, but this is creeping higher, this is creeping lower, and sort of at this point in time, if this becomes a bit of a more solid move into, say, the NFP, and the NFP comes in pretty strong, then it might be enough to make a new sort of busted out trend, which is good either way. I mean, I'm pretty agnostic about the euro. I don't mind if it goes to 105 or 120. I just want it to move. But just general US dollar weakness is US dollar strength is going to make things a little harder for some of those other pairs that we watch, namely the Aussie, which has its own little war going on. So RBA came out today. Now, we talked about the RBA moving more towards neutral rather than remaining dovish. Did a little bit. Market was obviously disappointed. But the Aussie can't really rally here too much. It might sustain itself, but it won't rally if the euro is selling off. So it's probably not going to bust that 77.50 very easily, okay, without some sort of weak NFP number. So continue range trading that pair. I have a preference to buy dips, but I could understand the sell side too. So yeah. Alright, so in the backdrop of this surprising risk-on trade, dollar yen strength and euro weakness, pound complete weakness, and NFP coming up, I suppose we have to go to the crosses, right? We can't really stick on the US dollar side. When the US dollar's being a little peculiar into big data, you don't really want to play that too strong. The trade I do like at the moment is long Aussie yen. So the client's been talking about that with me, and I've been suggesting there's some definite potential topside here. I mean, stability is very important for that particular pair. Now the Kiwi's got its own problems coming with the RBNZ. Aussie seems to have no real major stumbling blocks at the moment, right? China's not an issue, and so Aussie seems to be this bastion of stability. If risk is going to remain on and dollar yen wants to attempt a little rally, then Aussie yen can easily target up to that 80 level. So we'll bring it up, apart from the Mexican trade and Aussie Kiwi. We'll bring it up. Let's have a little look. So that's the weekly. So we're coming off a low base, but importantly, The last 3 or 4 weeks, we've definitely seen some stability, and we're busting out to the top side. Okay, now this is not ambitious at all to target 80 in the coming days, and it's the sort of trade I want. Now I was talking about buying a dip around about 78. We didn't get that 78.00. We haven't got that just yet. We might just buy a little just to anchor us in. But you know, this sort of trade to me makes sense in the current market, and so I don't mind chasing it. Obviously, we should have entered a fair bit earlier, but you know, you put on the spot. We want to do some sort of trade idea into the market at the moment. I like this risk reward here. So targeting 80 and put your stop. I mean, look, if you buy a little bit lower, then you put your stop at mid 77s. This is a little bit bigger stop than you want generally, because it's you know, your risk reward's not there. Now, if it gets to 80 in sharp fashion, so it's a dollar yen led move, then we can let the market run, take half at 80, and then let the market run, and potentially you've got ourselves a nice 600-700 point mover back towards 84, 85. And that's not even really challenging the long-term downtrend. That's just more, you know, market specific here. Dollar yen having a rebound off 100. If it gets more and more cemented that 100 safe, then dollar yen could lead a rally in most of the yen crosses, even euro yen. So euro yen's waking up for a little bit for the first time. Now, if you're bullish on oil, you can play this as CAD yen, and if you are bullish on Kiwi, you can play it as Kiwi yen. I would be more hesitant playing Kiwi yen than CAD yen. I just suspect Kiwi's going to be under pressure going into the RBNZ next month. If you are playing the Kiwi, just keep in mind that we have the dairy auction tonight. Alright, so there is a fair bit going on in the background. And so I suppose most of you are trading the pound, but you know, you don't have to be into that shenanigans right now. Pound's having another leg lower here. Alright, let me have a look at some of the questions here. What sort of trading is this? Risk reward isn't there? Oh no, we're just doing trade ideas while the stream's up, mate. We're just talking about the Aussie Kiwi. So you want to buy around about 78, if you can. This is what we took a small trade, buddy. It's only a small one. Just settle down. We're not playing cattle stations here. So yeah, I mean, there's a lot of opportunity coming through the market. We might have a little look at some of the trade ideas coming through from the chat room. Yeah, I mean, I can read the comments, mate. Who are these new people in the room today? Jeez. They want my trading credentials. Alright, class is pretty good usually. Follows the market. Follows the trend a lot. Look, I like this trade, but it's like I said, you're playing with fire here with the pound. It's a little bit oversold. The main reason I can't trade it is, like, I'm trading Asian session, right? I'm an Asian dealer, so I have to go to sleep at night, and this pair is going to move dramatically tonight, I believe, right? Either lower or higher. So it's sort of like I can't babysit it. I can't babysit the pound tonight, so I can't really take a trade on this break. But if I'm sitting at work tomorrow and markets at 129-ish, then I wouldn't mind getting into some sort of sell. As it continues to fall further, though, you know, I think we're getting, you know, 9 days straight selling, 10 days straight selling. You know, most I've ever seen is 11 or 12 days straight selling on any pair, right? And the snapback always comes. Literally, the sellers have to close, right? So it's in terms of that pair, yeah, keep an eye on it, but it looks great at the moment. Risk reward on the sell side here on the euro. Yeah, I mean, look, we might get a few pips out of this. You've already got a few pips out of it. It's where you're going to take profit. If it gets down to this sort of level, it might be going a little bit further, right? That's my opinion here. So I don't know. I mean, you don't have to take profit at the lower 111s. What are you selling? No, we got one in here a couple seconds ago. Euro Aussie short coming in by FX Dash. I like the idea. Is it too early to even see it? Straight up. Okay. Pretty naked chart there from FX Dash. Okay. So 144 is huge on the Euro Aussie trade. You know, we'll get a little bit of movement here on the pound. Nice. 144 is held, you know, some big tests in much cleaner environments than where we are currently right now. Yeah, I mean, it's definitely looking like we're going to test it again. So bring up some Euro Aussie here. Now, we traded a lot of Euro Aussie about 2 months ago, and we kept off it in the recent rally. But that 144 level, you just got to be aware of the long-term support that's coming in. So yeah, sell it if you like, but it gets a little bit heady down there, because at the same time you're selling it down here, you're probably seeing the Aussie getting up towards that 77.50-ish level, and you've seen the Aussie being rejected above 77 a few times now. So that's coincided with a lot of these little fails. So it's with the trend. It's not too bad, that class. Gold long. Now gold longs, that's a dangerous trade. Gold long is you can feel them almost hunting stops underneath 1300. So I'm not going to be buying this dip, and I wouldn't be suggesting that you buy this dip. I mean, look, every dip is being bought, yeah, but at some point it's not. Yeah, and once it breaks, you can imagine the accumulation of stops underneath 1300. Now I don't mind, you know, selling the break or even buying the false break rally. So say it gets to 1280 and then a couple of days later we're back at 1310. To me, that's very bullish in this sort of chart, so I don't mind buying that sort of action, but I don't want to buy it before the market's made its mind up. We could easily sell here and just keep cracking. Not much support below 1300, so unless it's a game and they're just taking stops. Alright, the other trade's a bit too old. So let's have a little look at some bank research, have a chat, see what they're thinking here on the euro, sorry, on the pound. See if they suspect. I think Potter was saying that they've all turned ultra bearish. I mean, this is what analysts do, right? They turn ultra bearish and the market's ultra bearish. Remember the Aussie Kiwi? They're all going parity when it was down at 102. Now they're all going 107. I mean, these guys are not the traders in the trading room. These are the analysts who are paid to make reports every day. So they've got to put out a report, and they put out a report usually with the latest bias. It's not rocket science. So just take a take them with a grain of salt. First, we've got to look and see if they believe the RBA's gone a little bit more hawkish or not, a little less dovish, more neutral. I mean, it was underwhelming, right? It was an underwhelming first RBA meeting today from the new governor. Now he's been a deputy for a while, but there was some sort of hope that he would stamp his presence. So all the big banks here in Australia think they're going to remain on hold. Goldman thinks they're going to remain on hold. Nothing's controversial here from these guys. Goldman also thinks that New Zealand, RBNZ's not going to cut again. So, I mean, that's a big problem here for the New Zealand dollar sellers if RBNZ go the same way as the RBA. Because the data out of the New Zealand has been pretty strong. And I can actually see a scenario here where they do change to neutral as well. So drop the dovish bias. But somehow they've got to take control of the Kiwi dollar, which in this trade-weighted index is still extremely high. I see what you did there, Morgan. I see what you did there. Right, nothing of note from these cats. HSBC put out a little Brexit update. Yeah, so they're concerned by the rhetoric coming out of May. Namely, there's going to be a lot of resistance from Poland and a few other countries in how they look to control its borders, and they may veto any sort of trade deal that the UK tries to get passed. Right, that's a concern. Geez, it's really slow going, guys. I mean, at some point the market's going to get fatigued about this, right? So they start the process in March, which means that they're going to be out of the EU by April 2019. That's like, I mean, sometimes the market goes back to the data. And data alone, the pound is 20% undervalued, right? Yeah, it's hard to know, right? So they're talking here about the negotiation stance. It could be just Buster. It could be just coming in from the high positioning to sort of get more concessions from the UK, from the Europe, so that, you know, if you start hard, then you go a little bit softer, then it's, you know, you might end up at a better position than if you go in too soft. So this it's hard to know exactly where they're positioning themselves here, why they're doing it. I mean, if they really just don't care and they're not financially savvy and haven't got the memo yet how important it is for the UK banking sector to have access to the Eurozone market, then, you know, perhaps the financial market's going to let them know that. But right now, yeah, they seem to be coming across pretty hard. And yeah, remember that there is some hesitation there from the S&P, and that could create another level of uncertainty. I'm not too because I'm obviously in Australia. I'm not too linked in with UK politics, but it might be worth spending a little time there, getting to know the players, getting to know their background. Alright, we'll finish on a little bit of text, guys, then we'll be done for the day. We'll be back tomorrow at 9 GMT though. If you do want me to go through a particular chart, just send me a PM in the chat room. If you're watching on YouTube, come across the Forex Signals, that's where we're hanging out in there. That's the platform where we was looking at trade ideas before. So yeah, take a moment to check your text on some of your trades here. I'm interested to see the pound text, where they think it is. I mean, these guys are just making this stuff up, right? There is no technical support on the pound now, but you can see the big thing here about the Kiwi is it hasn't collapsed for a while, so its 200-day moving average is still so far away. Everyone else is relatively stable. Obviously the dollar yen still hasn't caught up with its big sell-off yet, but the other moving averages are much closer. So it's I'm looking really at the Kiwi as the biggest potential here. But, you know, we've been talking Aussie Kiwi long for a couple of months, right? And now we just need to see the right signals. So keep an eye on dairy auction. That comes out around about 12. 12, actually about 1 now with daylight savings. So you're looking at about 5 hours from now. It's tentative though, so you got to, you know, sort of be there. But towards just after the US Open. So a fair bit of support here for the pound yen as well, relatively close. Pound yen's going to get sharp, guys. It's going to get pretty sharp in the next few days. Not the sort of trading that I would be entertaining. Yeah, I'm not one for selling below 130, that's for sure. No, I'm a market analyst. So yeah, I used to be a signal provider. I used to trade full time living in Thailand. It was okay, but it's a lot of stress. It's easier to not trade for a living. I think you need more capital, probably around 500,000 to really trade for a living without taking too much risk. It depends on how much you can sort of risk and be happy, lose and be happy, right? I was never happy losing 5 to 10 grand. So that sort of money, when you're trading to make a living, you have to trade pretty big, right? 3 or 4 lots. It's quite easy to get into those 5k, 10k downsides. You don't have that sort of variance when you've got your 9 to 5 job. So I'm gonna keep trading part time, analyzing the market full time, and just fits my psychology better. Maybe when I'm a bit older, I can just trade part time and live my life, right? But trading full time is not easy, guys. After trying for a couple of years, I can tell you there's easier ways to make a dime. It's great when you're making money, but say you make 10,000 for the first 3 months, right? 10,000 a month, and then the fourth month you lose 10,000. Okay, you just lost 2 months worth of work. You don't get that in your normal job, and keeping motivated, keeping mentally locked in, it's a hard thing to do. So people like Viper, right? I have a lot of respect for. It's not easy. I mean, he's been selling, Europe for 2 years almost, getting smashed by subs, saying what the fuck, and he's still keeping at it, right? He's still keeping at it, and I mean, literally the mental capital that it must be costing him is, he must have humongous reserves of mental capital. I couldn't do what he's doing. So yeah, it's yeah, I mean, when you're your own boss as well, it's very easy, especially if you live in Thailand, like I did. Very easy to say, I'm off to the pub, maybe sometime. The market's not moving, right? You still want to sit there and do trading all day? Jeez. Sometimes it's hard to do that too. So, yeah, I mean, we'll talk more about that stuff one day. Right now, just focus on the market. Let's see how this pound plays out. We'll do an update again on that tomorrow. As we get closer to the NFP, we're doing NFP live this week, so we will be watching the event. Last couple of months we've been doing that. It's been some big events. I think we had 350 people in it, in the chat room last month. Luckily we called it right. We're trading post announcement. We bought that dollar yen for 100 pips, but yeah, no pressure. Got to see if I can pull it off again. All right, guys, have a good night. I'll be back tomorrow. If you have any questions or any charts, just send me a PM. I'll be there.